Um, to start off, to the group out there, I would like to say this is a speed bump and not a wall, right? Unfortunately, we've been through this before with both the AD/CVD section number 1 and section number 2 in 2012 and 2014, with relatively similar results to what we just got as with the C201 petition. That being said, after both of those situations, the U.S. marketplace not only survived, but it continued to thrive. And there's plenty of evidence to show the growth that we've been through the years and multiple years past both of those trade cases. So no need to panic in the marketplace. Is it definitely going to have an effect on our mutual businesses? Absolutely. But I think it's definitely one that can be mitigated, managed, and I think our brightest days are still in front of us. There's obviously different, as has been alluded to, different impacts to different segments in the marketplace. If you really look at your customers and being in the sales business, know thy customer should be everybody's mantra. And for this discussion, I think is more relevant to talk to both the C&I business segment and the residential business segment, and really how this is going to impact, these higher module prices are going to impact the marketplace. If you really dig into a C&I P&L, right, a standard commercial installation, you'll see that module prices make up roughly 25 to 28% of the total cost of a system, which is significant. It's usually the biggest piece behind overhead, profit, and other soft costs, but it's not massive, right? Based upon our inputs that we've received from the tariff, and again, this is going to vary based upon installation, location, so on and so forth, that percentage rises up from 28 to 32%. So it's not a huge percentage, but certainly a manageable percentage on the P&L. The other thing to keep in mind is the Trump administration, although gave us a slap on the face as it relates to the imports of modules, they also gave us a nice little benefit in a giant tax cut. So the corporate tax rate, as we know, has just recently dropped from 35% to 21%. So where part of the P&L has been impacted negatively, the other part has been impacted positively. They don't offset each other on an equivalent basis, which would be nice, but that's not the case. However, though, it is a mitigating factor. Net, there's a lot of opportunity for our C&I and residential customers to find cost savings in other parts of the installation, whether it be soft costs or hard costs, to make up for this. There may be some pushback on our end customers on raising prices slightly, but I don't think that's going to be very hard for the market to do. And I am in line with previously had run my own numbers, but in line with GTM's assessment that any impact to both the residential and commercial space is going to be small, low single digits for at least the next couple of years. Hence the comment, this is a speed bump and not a wall for the industry. Still very bullish moving forward. A couple of things to note, and I know there's probably a lot of questions. Let's keep in mind the U.S. within the global supply-demand construct. As you know, having gone through 2017, we went through a very tough supply situation for the U.S. marketplace and globally. That construct has not changed. Globally, there's more demand than there is supply on the manufacturing side of the house. So even though we may lose a couple of gigawatts out of the U.S. utility segment, all census is that will be easily absorbed into the global marketplace. So a little bit unlike 2012 and 2014, where we were in a more of a production demand swing on the supply side, now we're on the demand side is greater, and we're expecting that shortfall will get consumed fairly quickly. I'd also like to throw out an important note for obviously us here in the Americas, in the U.S. We have pretty much a unique supply chain that's been developed over the last few years. Since the AD/CVD, China production is really pretty much verboten, and I think Gary had talked to the fact that China imports have dwindled down into single digits, and that is the case. However, with the Indian market is also going through a similar, a trade case just like we are. And they recently got a preliminary 70% tariff on Chinese and Malaysian production. So what does that mean for us in the U.S.? What it means is you're going to have a very, very large Indian market that now needs to fall back on the exact same production facilities that have been supporting the U.S. and Canadian market due to Chinese tariffs. So you're going to have more pressure on the same production assets, which, you know, on a supply-demand balance is not necessarily working in our favor. So my guidance is please keep your eyes open for that in case we run into a supply-demand challenge again later on in the year. The last thing I'd like to throw out here before I move it on is what is the price impact, right? What can I expect in my bottom line? Well, that's going to vary by the product that you buy and the business that you run. The one thing I would just caution everybody a little bit, the 10 cent a watt has been thrown around. Okay, I expect my pricing to go up 10 cent a watt. If you do the math really quickly, that 10 cent a watt is really an estimate based on gate costs coming out of facilities for a regular run rate poly product, right? Kind of your run-of-the-mill full cell poly product, which is relatively ubiquitous. When you get into additional technologies, high efficiency technologies, when we're talking about mono, which is more expensive than poly, when we talk about PERC, which adds cost to the system, dual cell, right, back contact, high density modules, those all come at a higher cost structure. And the cost structure is what determines the tariff rate. So this is an ad valorem tariff rate. So whatever the manufacturer's import cost of record is what the tariff gets applied to. So I would tell you that the 10 cents a watt is on the low side, depending on what type of product that you're purchasing, and then to budget accordingly for those of you that are using the high efficiency products. And with that, I think I've worked through my 5 minutes, so I am going to hand it over to Jonathan.